So yesterday, we did up until we did the credit note, we did the provision. Okay, we were busy with the stock stolen. And I was busy telling you, always remember, you're going to do two things when stock is stolen or burned down, or there was a rain, or there was some or other insect coming in, eating it up. Doesn't matter. Anything that I lose and I can't sell it, right? What I'm going to do, first of all, I want to know what's my loss, okay? Because my loss will be an expense. I did explain this yesterday. The second thing I need to do is I need to remember now, that stock that was stolen, burned down, eaten up, is gone. I don't have the stock anymore. So the full stock I have to subtract from my trading stock when I calculate deficit or surplus. Okay, so this is the full amount that I lost. Because this isn't about my loss. I've already shown my loss on the stock that was stolen. But this is for me to be able to see, is there still other stock that is missing or broken or, you know, that I didn't pick up during the year. Ne? Because that's what trading stock deficit is. This is stuff that I count 7 shares, but in my books it says 10, so 3 is missing. Why? Okay? That's the difference. And I can't claim that back from the insurance. Usually it would be because of an entry that hasn't been made or an action that hasn't been done. For instance, a debtor returns goods, but we don't let the bookkeeper know. So it's not in the trading stock T account, but when I count, there's 3 shares extra. Then it would be trading stock surplus. Another example, a debtor came to collect goods, ne? But the sales transactions haven't, for the day, has not been entered yet. So it's not in my books, it's gone. So now my books is 3 shares more than what I count, so now it's a deficit. That's usually what that is. Okay, so let's go on. Next one. So we've done the physical stock take. Now I have to remember, and you guys, it frustrates me so much that in grade 12 you still do not get this. So please listen. Any consumable, meaning stationery, packing material, consumable stores, cleaning material, okay? I have a total expense. In other words, that which I have available to use. I bought it. I have it left from last year. Now that is being split into used and not used. So I have 10 bottles of Handy Andy. Ne? Now I can give you either one. I can tell you we did a stock take and there was 3 bottles. Meaning how many bottles was used? 7. Or I can say to you, we used 7 bottles. Then I know I have left 3. So what do I do with those ones? The used, I did it the other way around, sorry. The used ones goes to the income statement. That's my real expense for this year. The unused ones is consumable stores on hand. Please get this right. So what are they saying to me? I have 2,000. So if I am able to count the 2,000 rands worth of pens, it means I have not used it. So it's unused. So what do I do? If I go to stationery, can you see what I did is I took the total expense that I bought this year. I subtract the unused ones because I want to see what was used. There are still some of you that say minus 60,000. Please get it right. Now, let's go to the salaries. So most of you got this one right. Just remember, we are busy with the income statement, meaning we want the gross and the contribution, which they actually made it easy for me because they gave me balances for the salary wages, which is the gross, and the contribution separately. So already you got 2 ticks just by transferring the balance. Okay? Then you have to add, I want the gross. So if I look here, do they give me the gross? No, they don't. I need to calculate the gross. How will I calculate the gross? Gross is most net plus deductions. Okay? I'm reversing it now. You see? Usually you say gross less deductions gives me net. But now you have to add it. And it's going to give you 10,000. Okay? And because it's grade 10 work, you get 2 or nothing. With the contributions, you have to go calculate. So let's see. They say pension fund is 10.5% of the gross. So it's 10,000 times 10.5. That's where the 1050 comes from. And the medical aid is rand for rand, meaning exactly what they got there. Okay. You guys must get this right, because this is easy marks every time. Let's go. Director's fees. Is that the next one? No. The tenant has paid his rent for March in advance. So already you have to know your rent income is going to be a minus. So already if you transferred the trial balance and you minused, you get the bagel. Okay? Now let's go to the calculation. So the calculation says the rent increased 700 rand a month on the 1st of December, and the premises were rented from the beginning of the financial year, meaning he paid 13 months. You agree with me? Mm-hmm. Okay. So I go look. 700 rand. If I take my year, it ends, what, 28 February? Plus 1 extra month. I want to calculate that month. The increase of 700 per month happened on when? 1st December. So how many months did he pay 700 rand more than usual? December, January, February, and March. 4 months. So 4 months he paid 700. So that gives me 2,800. Is that right? Yes. Okay. So now, if I take the total rent income that I get in the trial balance, what is that? Rent income, anybody? 93,800. That 93,800, do you agree with me? This was a few months at X and a few months at X plus 700. Okay? So now if I can take that 700s out, I've got everything as X. So that is going to be less the 2,800, which gives me 91, which was for 13 months. And it gives me, what was it before the increase? 7,000 plus the increase. It's 7,700 per month. Is that right? Yes. Okay. Now, next one. The company has 2 directors. So let's go look at this one. He's got 2 directors earning the same monthly fee. You agree with me? That gives you 24 months. No? Does that make sense to you if I say 24 months? Because I say one director every month is 12 months. Second director every month is 12 months. So together it's 24 months. Okay, so if they give me a total and I divide it by 24, I will get how much one director gets every month. But now they say one director only received his fee up until 31st December. Okay, can you now see 2 months accrued expense there? Can you see that? Okay, so in other words, the one guy only got 10 months. He will be remunerated in March for the outstanding months. Okay? Now we get a third director, meaning the other guy got his 12 months, because they don't say anything about him. The third director was appointed on the 1st of December. He earns 5,000 per month more than the other two, and he has been paid in full. Okay, so that guy has December, January, February. 3 months he earns X plus 500. Right, is everybody with me? This is a difficult one. $5,000, sorry. So now I have to think of it. Let me just pause while I think. Okay, so this is the same principle as the rent. I'm going to take what was the total director's fees. I see it was 815. Ne? So now I'm going to subtract for 3 months 15,000, right? Which gives me 800,000 if everybody earned the same amount. Ne? So that guy got 3 months, December, January, February. So can you see in total that 800,000 is for 25 months? You guys get it? No. Okay. So let's start again. So this is director 1. Ne? He gets his 12 months at the value, let's say X. Right? That's how much he earns. Okay? This is director 2. He only got 10 months, but he got the same as this guy. This is director 3. Director 3 got 3 months, but he got X plus 5,000. You see? So now, if I take that 5,000 there, if I take it away, can you see? Then everybody earns the same. So what do? I say, okay, for 3 months, he earned 5,000 more. So if I take the total amount that I paid, the 815, and I take out that 3 times 5, that 15,000, then it's as if each one of them got exactly the same every month. Okay? So now I get 800,000 was paid in total. Ne? If I take out that 15,000. Now they're all on the same place. So now I want to know, okay, that 800,000 is, this guy got 12 months, this guy 10, this guy 3. So together it gives me 25 months. So if I say 800,000 divided 25, I will get the fee per month, ne? Per person, ne? Per person. So let's see. How much is that? 32,000. Okay. Now, am I doing anything with this guy who earns 5,000 more? No. Can you see this guy doesn't earn 32, he actually earns 37. Ne? Which guy am I talking about now? I'm talking about this guy who only earns X, which is 32,000. You guys see that? Okay? So now, how many months didn't we pay him? 2. And that is why they go and they add 64. Because it's 32,000 for 2 months. You see? Aren't you glad that I copied it nice and big for you to make notes on? Let's go on. Next one. Let me just put this here for everyone to know. People are asking me what's happening because they are not with me. Let's go on. Make provision for vehicles, depreciation on cost. Now, can you see it's split? Because usually it's more snow. Now if I look here at this vehicle, I have a new one, but I haven't got a sold one, so it's only new and old. Okay? And it's on cost price. And the moment I see cost price, I'm very aware of the 1 rand thing. Okay? So now let's go look. A new vehicle was purchased on credit for 420. So I take the 420, I times it with 15% and the months. Ne? When did we purchase it? 1st February, so it's 1 month. Right. Now, this transaction has not been recorded. Oh, thank goodness. Meaning, if I go to the trial balance, it's not in here yet. Okay? So now I see they give me here 780. And now I just want to check. I'm not going to say 780 times 15%. I'm going to first check what was the accumulated. And immediately I see there, oh my goodness, here's a problem. Ne? Because the carry value is only 10,000. Now anybody with a calculator can see, or with maths or maths lit, which all of you have, can see. If I take 10% of 780, can you see it's already 78,000? Can you see the depreciation is going to be too much? So it's 10 less 1. Okay, so that's the second one. Can you see? If I look at depreciation, there it is. And there it is. So let's get the last one. And the last one is equipment. And equipment is on diminishing balance. So diminishing balance, I say 600 less 580, gives me 20,000, times 20% gives me 4,000. Can there be a residual value in play when there's a diminishing balance method? No, because your depreciation can never be more than your than your carry value, because you use the carry value times the percentage. You guys see that? Okay. I see I'm boring you guys to death, so let's quickly finish this up. The last one is they say they give me net profit, and I want to say I was quite happy with how you answered this. They give me net profit after tax 669, and they give me tax. Now I know net profit before is 100 less 28. Please remember your brackets. Gives me 72. Okay. And so what the examiner here did is she said the net profit, the 669, times 28 over 72. Ne? You could have also said the net profit, and then she reversed it, you see. But you could have done it another way. You could have said the net profit after tax times 100 over 72. And then you said here the net profit after tax less the net profit before tax. Then you can also get it. It's an alternative method. I was quite sad at how bad you guys answered this one. Okay, this isn't theory. I know they ask you to write words, but it's not theory. They are testing if you know your formats and if you are understanding your formats. So let's just quickly go look at this. If I can just find the question. So they ask me here, choose the correct words. Let me just move it up. Choose the correct words. Now, Can you see this is income statement things and balance sheet things? Quickly remember, what is working capital? It's current assets less current liabilities. Nee. Okay. What is finance cost? It's your interest. Anything interest is finance costs. Okay. So now let's see. The difference between current assets and current liabilities is working capital. Interest on the bank overdraft is a finance cost. A fixed deposit. Now quickly put a fixed deposit in your head. Where does it go? Face of the balance sheet. Non-current assets, financial asset, fixed deposit. Now let's see. A fixed deposit which will mature immediately. The part that matures becomes part of current assets, becomes part of cash. So they say will mature within the next year is a current asset. Can you see why I think you should have had full marks? Thank you. So let's go.